Okay. All right. So welcome to Saucy Saturday. Let me leave it. Okay. All right. So I'm going to take a step back, and today we're going to focus on trading view. All right. So let me go back to that. And remember, we're on the road to 5 figures. Where today is October 2nd, 3rd. So October 4th, tomorrow, Monday, we are going to be hitting the ground running so that we can have a cashy Christmas. Now, I don't know if there were any stumbling blocks along the way on the road to 5 figures by November 4th. If there were stumbling blocks, it's still okay. All right. That's what I love. The fact that you can always pick yourself up and go from where you are, right? Every week you're learning more things that you can implement. The biggest thing is learning discipline and patience. You're not going to be a success if you don't master those things. It doesn't matter if you know the skill or not. You can know the skill, you can be excellent. If you don't have patience and discipline, and you have your rules, and if everything doesn't check off on your boxes, you don't jump in the trade. Follow your rules no matter what, even if it means that you're going to take a lesson on any trade. Remember, you cannot win every trade. You follow the rules and it will pan out more often than it won't once you just stick with your rules, right? So Saucy Saturday, this challenge. Of course, I'm going to cover the basics before I jump into trading view. So we know that we need to have a trading plan, right? So you can't just jump in the charts and decide, oh, I want to make some money and make some money, right? Life doesn't work like that. Anybody that has achieved anything, it's as a result of having a plan in place and working the plan. For us with trading, what we can use is compounddaily.org, right? And you want to grow your account by, say, 5 to 8%. Now, 8% is really ambitious. It's really ambitious, right? When you're just starting out, you want to aim a little bit lower. But as things progress, you can get up to 8% and even surpass that if that's what you want. Once you have your skills down, you have your rules, and you know what you're doing, you can set whatever goal you want to set. This is just a suggestion. You really can do whatever it is you want. So I'm saying 5 to 8% on average, right? So you'd go to compounddaily.org in order to get that going. And compound daily interest calculator. Yeah, there we go. And say you start with $100. Now we're getting close to December, and what's coming up in this last quarter of the year? There's Halloween. That's not a big deal for me. But then there's Thanksgiving. That's a big deal for me because I love to eat. You know, eating is life, right? So there's that. Then there's Christmas, also a big deal because again, I love to eat. So, you know, any holiday that involves eating, sign me up for that. So, with that being said, we want to have a nice cashy time for all these different events, right? So, starting in October, say you want to grow that money by that 8%, um It's more than 60 days that will take you. I want to see what will take you to December 20 something. Let's see. Oh, December 24th, 60 days, right? So, oh, okay. That's okay. So if you start on Monday, and remember the market opens tomorrow evening, 5 p.m. Eastern Standard Time. But if you start tomorrow, oh, I'm just seeing this now. Thank you for attending. Oh, you're welcome, Ty. I had a blast going to your party. Right. So if you start now, by December 24th, you will have $10,125, right? And the breakdown, the first day with $100, your goal is $8 because 8% of $100 is $8. So you need to make $8 and stop trading. Now, what I want us to do, challenge yourself. See, we jump on all different calls and take trades, and then we also go off and take our own trades. If you know that you're not that great of a trader just yet, if you have more than one account, like you could have a $50 account with pocket option, you could have a $50 account with platinum option. That would be good. So if you have two separate accounts, use one of them exclusively with what the educator that you're following. Don't take any trades independently, right? And I'm saying that because I was on a call with Ken Remo and he asked that question. See, last month he had a 100% streak with all his trade ideas that he called out. And he's on 5 days a week, Monday through Friday. Ken Vree's on. If somebody logs on with him every single day that he was on and traded with him and did not trade outside of him, their account would have been up. So he asked, everybody, you trading with me? I'm having great sessions. What's your account looking like? I know a lot of people, they get on, they trade with me, and then after they go and they trade with other people, do other things. Do you find that at the end of the week, you're still where you were at the beginning of the week? And a lot of people said yes. That wouldn't have been the case if they just dedicated that broker to him, right? And he said that when he was learning, he had multiple accounts. Maybe you can't have 5 accounts, maybe you can't. Maybe you can just have one. If it's just one, just use it with the educator and do everything else in your demo account, right? If it's possible for you to have 2 and you feel like you know what you're doing, you want to trade, do it in the other account, right? Because when he was learning, he had each broker dedicated to the different educators that he was following on the platform, and he didn't cross trade, right? And I think that makes a lot of sense. Now, I don't want to brag, but Ty and I, we have a trading session that we do on Wednesdays where we're giving out trade ideas, and we have a almost perfect streak as well, right? So you can come on to our call on a Wednesday and secure the bag as well. Also, I do a call with Louise Monday, Tuesday, Wednesday, Thursday at 4:15 p.m. Eastern Standard Time. I don't want to brag there either, but we're killing it as well. So between finding whatever educator you like and working with them, or within the organization, you have me being available for 5 sessions. Monday, Tuesday, 4:15 p.m. Eastern Standard Time. Wednesday, 11 a.m. and 4:15 p.m. Eastern Standard Time. And Thursday, 4:15 p.m. Eastern Standard Time, right? So you have access. So while you're still learning, you can be having profitable trades because we're just securing the bag. We're doing amazing, right? So just want to say that. And you see, by day 30, $74. Some people, that's what they make in a day. And remember, I say it all the time, I'll say it again. Don't think in terms of the dollar amount. Think in terms of the percentage that you're making, because you know that you would never be able to do that elsewhere, right? Just grow your money at 8%. Now let me, hold on, let me go back here. Okay. So when it comes to taking those trades, yes, you want to grow that money, but you're not going to risk whatever you're trying to make, that whatever your target percentage is for the day, you're not going to risk that whole percentage in one trade. You're going to risk 1% if you really, really new, risk a tiny fraction. It's 1, 2, or 3% tops, right? And one thing I want you to not do, I know I'm here talking about how awesome of a trader I am. What has happened to me in the past is thinking that, oh, this educator is so amazing. Their account is growing so well. I can risk 3%. Don't do it. Because sometimes, even if the people are getting in their trades, they're doing it perfectly, executing, clearing the trades, you may be getting in a little late or whatever, and somehow everybody else clears and you don't. You wouldn't want to have risk 3% of your account because you think, oh, it's a sure thing because it's this person, and then you don't clear. Because even with perfect analysis, things can go wrong because the market is going to do what the market wants to do. We're trying to predict, but we can't do it 100% of the time. Okay. And you can not execute the trade in exactly the same manner that the person that you're watching is doing it. And you don't want to, fall into that trap. You get in 3%, you roll it over once, twice, you're over the 5% loss, right? Because see, it says here, stop trading when you hit your target, but also stop trading once you have your 5% lesson, right? So if the goal is 8% to stop, the goal is 5% to stop if it's a 5% lesson that you take. If your target is less than that, then you, of course, you're going to adjust what percentage you're willing to lose, Now, the next stop is going to be the Forex Factory, because there you want to check the news, right? Red folder means do not trade any pair that has that currency. Orange folder is moderate impact, and yellow folder is low impact expected. So we're going to go to forexfactory.com. Right. And it's Saturday, so, the market is not open, so we don't have anything happening. Let's see here. The market opens tomorrow. The first news event is at 7:50 p.m. Eastern Standard Time on the Japanese yen. See the date, the time, and you need to make sure you have it synced with where you are, right? And the folder here, it's a yellow folder. So that's no impact. All right. 8 o'clock, yellow folder, low impact. We don't trade any Chinese currency. They have a bank holiday. So, I mean, but really, if I see a gray folder, which signifies a bank holiday, that is not going to stop me from trading. I haven't found that it really affects anything. I've been on with educators who have disregarded that. So I follow suit. When it comes to the red folder, now this says all. So on Monday, all currencies have high impact. There's a red folder here. So maybe we shouldn't trade on Monday. I'm going to go in my demo account and see what things are looking like on Monday, because I've never seen this before where all currencies are affected, like that. I've never seen that. So that's something for us to watch come Monday, right? So maybe I will trade Sunday and forget about Monday. So I'll trade maybe 11 o'clock Sunday night, somewhere around there. All right. Now, if I am going to trade a yellow folder, which I do, if there's also an orange folder or a red folder somewhere around, then I won't. Okay. If it's just an isolated yellow folder, I will. But if there's like a rainbow coalition going on, I'm not going to trade. I'm not going to trade it. Right. And also what I found is that when there's news on the US dollar, even the other currencies which may not have news tend to be affected. The US dollar is so impactful. So when there is news, pay attention, lower your risk. Okay. Now, while I will trade on a yellow folder, you don't have to. See, Ty, my trading partner, she does not trade any currency that has a folder on it unless it's a gray folder. Like she'll trade a gray folder just the same as I will, but if there's any folder at all of any other color, she's just not going to trade it. And that's just her rule. Remember I said you have your rules and you just stick with your rules, right? So that's her rule. And there are so many currencies to choose from that it's not hard for her to go with that. It does not stop her from finding currency pairs to go ahead and take her trades. It just will not include whatever that currency is, right? So that is that. Let's go back here. All right, so that's Forex Factory. So now, and this is going to be the last stop before trading view, I believe. So you want to know what you're going to trade, right? So to figure out what you're going to trade, you use the currency strength meter. And there are two sites that I look at. You can look at livecharts.co.uk. And I go to currency strength meter. Right. So here, if you can count, what you do is you count the bars. The one with the least amount of bars is the weakest. So the US dollar is the weakest currency. Strongest being, we have a few, GBP, AUD, I don't know what that is. We don't trade that anyway. Canadian dollar, right? So that's one option. Now, the next option is Pinvis.com. And I tend to use this one more. Reason being, it updates in real time. So I look at this bar at the bottom, and the currency furthest to the left is typically the strongest. The currency to the right is the weakest. Now, looking at this, we see AUD, GBP, and NZD, and they're all pretty much around the same, just slight difference. You see the percentage there. You can't tell that here. You just know that they all have this 2, 4, 6. They all have 6 bars, but you don't know exactly which one has the most volume, right? You can see it here. Now, with livecharts.co.uk, you have to refresh the screen in order to see if any change has occurred. With Finviz.com, you'll see the currencies playing musical chairs as the currency strength varies. So since we know that the currency strength varies, would it be in your best interest to trade something that's side by side? Like, look, right here we have Euro JPY, which is a popular currency pairing among a lot of the educators. They like to trade Euro JPY. Me, looking here, I wouldn't want to trade it because I could do my analysis and then jump in the trade, forgetting to check the currency strength to make sure that it's still the way I want it. And then they could have switched. See, when you're trading, you want to make sure that the base, which is the first currency, is stronger than the quote or the second currency. So here, this has the greatest separation, AUD and USD. That's a pair, AUD USD. So if I were to be analyzing the market, I would want to look at AUD USD. I would want to look at GBP USD. Now, with that, they are the strongest, the stronger of the two, right? From AUD and USD, AUD is the stronger of the two. So I would be looking to buy. I would be looking to call. I would be looking for price to go up, right? Buy, call, north side, price to go up. That's when the first currency or the base is stronger than the second currency or the quote. So AUD USD, that would be a buy. Same thing for GBP USD. Now, let's see. Let's see, for a sell, USD JPY is another popular one amongst the educators. So with USD JPY, USD being the base currency, is it the stronger of the two? No, it's the weaker. It's over here. So when one or the base currency is weaker than the quote or the second one, you look to sell, you look to put, you look for price to go down, you look for price to go to the south side. Does anybody have any questions? I've just been talking. I haven't asked anybody if anybody had any questions. You can come off mute or you can drop the question in the chat, whatever floats your boat.
All clear.
Okie dokie. Perfect. All right. Let's go back here. All right. So now that we have that, today, that's not what I wanted to do. I wanted to move to, okay. Hold up. There is another slide. Okay, here we go. So how much time per trade? Well, it's all going to depend on you ultimately. But until you decide what works for you, when you get on my session and are taking my trades, I do 4 minutes fixed time, right? And I do one rollover maximum. Now, that's me. That's what's been working for me. Once you start trading and you get comfortable and you're able to be independent, you may decide something else works for you. So when you're on a session with myself and Ty, when you're taking my trade, I do 4 minutes fixed time. When you're taking a trade with Ty, she does 1 minute. Is it fixed time, Ty? I think it's fixed. Hmm?
Are you able to hear me?
You're sounding, yeah, what is?
I do 1 minute fixed time. I don't know if you can hear me.
Okay. All right. 1 minute fixed time is what Ty does. So when she calls out her trade idea, you want to make sure to adjust accordingly. When it's mine, adjust as well, right? So you got to pay attention to that. So those are all the different things that can happen. Why I say don't risk 3%, because imagine you jump into a trade that I called out, but you do it 1 minute fixed time because that's what you had it on for Ty's trade. You forgot to change it, or on the flip side, you get in for 4 minutes when it should have been 1 minute. And like, oh no, we clear, you don't because you had the wrong timing. So you just want to stick with whatever percentage. Don't overdo it thinking, oh, I'm taking their trade, right? So we want to do that, right? And when you practice in your demo, you can play around with timing and see what works for you, right? Now there are some certain times of the day within an hour. There's certain times within an hour that I found are great opportunities to trade. On the hour, on the half hour, and on the 45 minutes, right? So this week, I really tested it out and it was really working. It was like, eureka, I felt really good. I couldn't wait to come and share it with you guys. So, and this is something that in the academy itself, in the pre-recorded lectures, Evan Cabral talks about the timing strategy. So it really works. He spoke about it. We hadn't really been paying attention to that, but it works. So if in an hour you trade those 3 times, is that 3? 1, 2, 3. Or it could be 4. If you start at 11 a.m., you take the trade right at 11. You take a trade at 11:30. Take a trade at 11:45, and take a trade closing out for noon. That's 4 trades, and that could be your 4-0 for the day, right? If the situation doesn't present itself, there are 24 hours in a day to wait. You can just come back. So what I find, if I'm analyzing the market and I know that I want to get into a trade at X price, right? I can wait to see if it will get to that price by that time, and I can take the trade at that time. Is everybody following what I'm saying so far? Drop a 1 in the chat if everything is clear so far. Okay. That's right. Okay. So I'll go over it again since only 2 people said that it's clear. Okay, 3 people. All right. So you want to get into the trade at, okay, 4. All right. Good. All right, so I won't repeat that. And the recording, I'm going to make sure that I put the recording up so you can have it anyway. All right, so now if price comes to where I want it to come to before the exact time that I want to get into the trade, I'm calculating how much more time it will take to get to that time. So say I jump into a trade at 120 and I know that at 130, that's the reversal time. The price tends to reverse at that time. And that's what we're doing. I get in at 120. So I know that that's trade is like a 10-minute trade, right? If I see where price could go this way a little bit more before it comes back, I can, instead of doing my 4-minute trade, and this is something I don't want you to just go and do it with your money. I want you to go and practice it in your demo account. I want you to jump into the trade. Say it's 120, right? You're jumping in. Jump into the trade for 11 minutes so that it's going to take you past 130. And you're going to see it spikes up or spikes down, depending on what direction your trade was going to be in. Drop a 2 in the chat if you're getting what I'm saying right now. Okay. Okay. All right, good, 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 good. Right? So it will take you past that time. And I know nobody has asked any questions. Let me address, because this is a question I had. What about the 15 minutes? Because it's the hour, it's the 30-minute, it's the 45. Based on Evan's studying of that strategy, he hasn't seen where that kind of reversal, that kind of spike happens on the 15, right? So that's why the 15 isn't involved. It's the hour, it's the half hour, it's the 45. So if you jump into a trade, a call, and I've seen it happen, yeah, I did my analysis, I jumped in, and it was just going to be a little under the time, like right before it hits, it would expire right before the mark. I just added on the extra time just to make sure that it will go there. And the call, it went out of profit and it stayed out of profit for a while. And then the time happened and the price just shot up. And because I had been in there to go beyond that time, I cleared. So test that out. Test it out. Test it in your demo. If you want to use real money, do $1 trades. But and I'm not saying it works 100% of the time, but it works. I didn't measure, but I'll say 99.9%. So yeah, I'm really excited about that. Next, the fib retrace. Oh no, I'm not doing any fib retracement tool. Next, we're going to go to tradingview.com. And that's what this is going to be the last thing. I'm going to use the last 15 minutes to deal with this. So everybody should have a TradingView account. It's free. If you don't have a TradingView account, you have a Gmail, you just need to log in using your Google credentials and you're good to go, right? So you go to chart. And here we are. I removed everything, I thought. Okay, but it's still there. Let me exit out. So when you log in, it's going to look like this, right? And I did some kind of customization. I forget now. That's why I have whatever I'm looking at, I have the currency pair faintly in the background. I don't even remember how I did that. I was on with somebody and following along to be able to have that, but I can't remember now. If and when I remember that, I'll let you know, because it doesn't automatically have whatever currency you're trading faintly in the background like that. Now, you can analyze all kinds of stuff in TradingView, but we're doing currencies, right? Here we go. We're doing currencies. So right here, you have the 3 black lines to the top. Beside that, you'll have whatever is on your chart. You're going to have it up there. Now, this is the free version that I have, so that's why there are pop-ups. If you don't want the pop-ups, you can pay for it, but it's free to get signed up. Oh, this I forgot to do. It's free to get signed up. And as you become an expert, then you may want to upgrade, you know? I haven't upgraded yet. Upgrading, the biggest benefit I think I will have from the upgrade will be to have multiple alerts set, because with the way I trade, I'm always waiting on price to come to where I want it. With the free version, I'm only able to have one alert set at a time. With the paid version, you have multiple. Also, you're also able to have multiple screens, so you can have things side by side, you know, stuff like that, which can be handy, right? So I click on this, and then you see this box pops up. It has stocks, futures, Forex, CFD, crypto, index. You can look at all kinds of things. So you're just going to type whatever you want there, right? So I'll type Euro USD, for instance. I'm always going to select Owanda, because you notice there are several options. I always select Owanda because with Owanda, I have found that the price corresponds with the price that's in my broker, whereas others do not correspond. And if I'm analyzing and I'm like, oh, I want to get in at this price, I would like to be confident that it's the same price that's in my broker and not some pips off. I need to be trying to figure out, oh, no, I don't want to figure anything out. I only want to figure out what I must. Anything that can just be convenient, I want that convenience, right? So now it's going to say it in the corner, Euro USD, and you know, I have it there, so I know. Now, when it comes to the market moves in 3 ways. It moves that way, and that's a trending upward, that's an upward trend, right? Uptrend. It also can trend down. That's the downtrend. Then also, where's the one that I can, okay. Who can tell me what this is? When price is moving like that, what's that called?
Consolidation.
Exactly, consolidation. Perfect, thank you. So it can go like that. Consolidation. Consolidation. Okay. Now, okay. Now, depending on what is happening, you have to know what you're doing. Now, when we're in an uptrend, you only want to take calls. You want to buy. You want to go up. You want to go to the north side. The trend is your friend is the same, right? So in an uptrend, you only want to analyze the market and enter going up. And understand that price never just goes up the way it's going up like that, right? In a downtrend, you only want to sell, put, go to the south side, go down. And understand too that price never just goes down like that. When it's consolidation, you can take up ideas and down ideas. You just have to wait on it to come here or here. Who can tell me what this bottom line is called?
Support.
That's right. Perfect. Support. Who can tell me what this stop line is?
Resistance.
Resistance. So the bottom line is support or the floor. The top line is resistance or the ceiling. So when price is going like this, every time price comes to the bottom, you want to buy. Every time price comes to the top, you want to sell. So you call down here, you put up here. And you just need to understand that basic thing, right? And everything is going to be great. Just review those concepts often. Now with price going up or price going down, like I said, it doesn't just happen like that. It actually happens more like this. That's how it happens. So when you're getting in to the trade, the biggest mistake you can make is seeing price going up and just jumping in. Because say you got in at the middle here, right? Say you got in at this area. Hold up. Oh, okay, here we go. Say you got in right here. And you get in for the 4 minutes that I say I get in for 4 minutes. And it goes up. But then it pulls back. And so 2 minutes here, the next 2 minutes here. You're in trouble, right? You want to wait for the pullback. Get in at the pullback, always. You want to get in here. You want to get in here. No. I was trying to move you. You want to get in here. What's going on? You want to get in here. Does that make sense to everybody? You want to get in at the pullback. You don't want to get in when a move is already underway. And when you don't get in, you may see that price never comes back and you feel like, oh man, FOMO, you know, you wish you were in. Don't wish you were in. That was not your trade. Your trade is your trade, all right? You missed it, tough. You'll find another setup because there are so many setups that are going to come, right? And it's the same on the flip side, going down, right? It's the same thing with consolidation. You don't want to get in mid move. You don't want to get in when the play is already in the works. Now, me, I mark up the chart on a number of time frames. And when you log in, you don't have the time frames all up there. To the right of the currencies, you're gonna have the time. Right now, I'm on the 5-minute chart here. You'd select the chart and it has all the different times. Now, I analyze the day. So I wanna hover over day and I'm gonna star that. I also analyze on the hour and I analyze on the 15 and I take my entry on the 5 minutes. So once I've starred them all, they're all here. So I don't have to keep dropping down to select the time every time I want to change charts. I just can click, oh, I'm looking at the day. Oh, I'm looking at the hour. Oh, I'm looking at the 15, you know, just like that. So that's something that's helpful for me. Anything to cut down on time, you know, that's just how I see it. Now, to mark up the charts, you want to use a horizontal line, right? So you click on the line and you'd be looking for that support and that resistance, right? So to put a level of support, right, okay, just looking at this, let's go on the hour. Looking at this, we see that it's a downtrend, right? This is a downtrend. And let's look at Forex Factory. Euro USD. Well, it says the euro is stronger than the US dollar right now. So that should be an uptrend in all actuality. But remember that the market is closed right now and things are, that's just what it is. Things are closed. Market is closed. But if you look at the day, Euro USD uptrend, there's a green candle here. So that is an uptrend. Price was going up until the market closed, right? So when I'm doing my markups, I start with the day and I'm marking up the candle to the left of the current candle. The current candle would signify the day that we're in right now. So I tell you the market opens on Sunday evening at 5 p.m. So tomorrow evening at 5 p.m., a candle is going to pop up here. So this is going to be the previous candle, right? So I would get my horizontal line here, select that. Once you see this box, it's there. And I'm going to mark the wick. I'm going to have it in black. And I'm also going to mark the body. So now those two lines I have there, move this up. These two lines are at the top of this candle, right? And what did we say the line at the top is? Resist. Hmm?
The ceiling.
The ceiling or the resistance. So this is resistance. So I have two levels of resistance because there's the body and there's the wick. As you watch videos in the academy, not everybody necessarily pays attention to the wick, but wick lives matter because price did go up here. When you see a candle that has the wick, it means that price had traveled there. A green candle is a bullish candle. And who knows what bullish means?
It means the price is going up during that candle.
Thank you. Right. So for a bullish candle, the candle opens at the bottom, right? So right here, 9:30, right? No, not 9:30. Sorry, 781. That's where price opened. Price opened here. At some point, the candle went red because if it goes below candle open price, it's red. So it came down here, but then it came back up. It went up here, but ultimately it closed here. So candle opened here, the candle closed here, but we know that price came into these areas as well, right? So this is resistance or the ceiling, right? And I have it in black because that's the color I use for the hour. You know, you're gonna figure out what you want to do, but when you're learning, just go with what the person does. So when you get on with your educator, just do what they do until you can do your own thing, right? So I come back and I'm going to mark the bottom of the candle now, and I'm going to do both the body and the wick for the reason that I just said. You know, it matters as well. And what's this? What are these lines at the bottom called? This was resistance, so this is
Support.
support, exactly, right? So I could come and I could select my line every time and select, but what I like to do is have my toolbox so that I don't have to come here every time I need something. My toolbox is going to have what I use frequently. So there's a little arrow. I hit that and it's going to show me all the different tools that are associated with this. And I'm going to star that horizontal line because I do use that quite frequently. Can star the trend line. That's another one that's used frequently. And I will also do the horizontal ray and the vertical line, right? So now, if you notice, here is a toolbox that popped up. When it's like this, you cannot move it. To move it, you have to come to the far left, then you have the hand and you can drag it, put it wherever you want. I typically keep it to the top right corner and I can just come here and get it. You can put it bottom, left, right. You put it wherever you want. I don't want it. I want it where I want it. Let's just say that. Okay. And then let's see what else. Is it here? I think it's here. All right. So yeah, the rectangle, I use that. This, I use that. So, I just put all the stuff that I use, as you're going along, you'll figure out what you use and create your own toolbox. So then I have the stuff here. So I don't have to come and search. It's just right here, right? So I've done the markups on the day. I go down to the hour and I'm going to do the exact same thing, right? And I just hit auto and that's what put the chart back to default because you notice things were looking tiny right when I clicked on it. I hit the auto button right down here below this gear to put things the way it needs to be. So I'm going to do the same thing on the hour. I take this horizontal line and I'm going to do the body first and I do red for the hour. And it's not the current candle, it's the previous candle, but we know that on Sunday, candle is gonna open up here. So I'm doing it on this one because this markup will be good for Sunday. So once I do this markup, I'm just gonna leave it, right? So here we go. I'm doing it on bottom as well. And so the other candle was green, it was bullish. This candle is a bearish candle. Could somebody tell me what bearish means?
Downturn.
Prices are falling.
Right, price is going down. So a bullish candle opens at the bottom, a bearish candle opens at the top. So price opened here. And we see this also has, let me just hide for right now. And that's another tool. If you use that, it hides and reveals, right? So let's hide that. So price opens up here.
What did you do to hide?
This, do you see my cursor? I
Yes,
brought it here.
yes.
Okay, perfect. All right, so here we have the opening. Price opened here. That's where price began. That's where it started at 979, right? I don't know if price came down, then came up, then came down. We know price was traveling. It's came up here at some point. When it was up here, the candle was actually bullish at that point. It was then green. But the moment it went back down, went down here, but it ended up closing here. So this is where price opened. This is where price closed, right? And what I didn't mention on the day, I will mention it now in the hour. Each candle, since we're on the hour time frame, each candle represents 1 hour. So when we were on the day, each candle represented the day. Now each candle represents the hour, okay? So we have that markup done. And on the hour, you want to take note of the levels. So you want to jot down the price, right? Because this is a key area, according to the educator that I follow, for entry, okay? The hour and the 15 are key areas. The day definitely is a key, but most times price doesn't come back to the day level during your trading day. But best believe if it comes to the day, that's the best. All right. So then you go down to the 15 now, and I'm gonna do the same thing again. And that's what I like about trading. It's not hard. It's you just do the same thing over and over and over, right? So gonna do the same thing. And it's always, when you're doing it actively, when the market is open, know that it's not the current candle, it's the previous candle, the candle immediately to the left that you're going to do the markups on. So here we go. And I like to use orange, right? The body and wick, top and bottom, and you're gonna jot that down as well. Oh, hold on. Delete. So for me, when the hour and the 15 coincide like it does here, I would just change it to a neon color, because if the hour and the 15 are key areas to look at, if they happen to be the same, definitely I'm gonna really want to pay attention. That's something to be like, hey, look at me. So I do that personally. That's just what I do. I did not get that from an educator. That's just something that I do. All right. So you have that, and then the 5 minute is where you're actually now going to look to find your entry. And we see that we're in a downtrend. So I'm looking at this. We see the day is here. So that's good. So I would be watching it though. Euro USD, it said that it was a call. And we know why it's a call, right, guys? Does everybody know why Euro USD would be a call if I look at this? Put a 1 in the chat if you know why this is a buy and not a sell. So it's a buy and not a sell because the euro is the base and it's the first currency, and it is the euro is the base, and it is stronger than the quote or the second currency, which is to the right. Now it's looking odd here because the market is closed, so we just cannot follow what we're seeing, right? Really what we should be seeing is price going this way, right? But anyway, so we see things look like it's going. Oh, well, it is. It is. Okay. Yeah, when we um take a bigger look, you see it. Okay, so I get this. There we go. That's actually, that's how it's going. Okay, so with that, this means that this broke out of the trend. And that's why, remember I said that you can do your analysis, but sometimes things just not gonna go the way you want it to go. But looking at this, I believe that price will turn around here because look, price came pretty close. It came here, it went back up. It's, it's here, right? So it's gonna go up. So tomorrow, look to see price go up from here. That's your assignment. So tomorrow, check and see what happens with Euro USD. If that's what happens, because that's what I see is going to happen. It came out, it broke out a little bit, but it's still an uptrend. It's a little bit of consolidating, but it's going up. All right. So yeah. So I just wanted to show you how to set this up, how to have your toolbox, right? Now, we use indicators for trading as well. So for the indicators, when trading with DeLorean, you go to FX indicators, you select that, and you would type in DeLorean EMA, right? And there it is. Star it. When you hover over it, you're gonna see the star. Star it. And so then it will be in your favorites, right? Everything that I've starred is here. So I select what I want, and now it's populated on my screen, right? And when it's there, you can always hide it and show it. If you hover over here, it's not gonna come up. You have to hover over here, and then you can hide it, reveal, okay? Now, along with the DeLorean EMAs, we use the stochastic, right? And the stochastic, you're gonna be STOCHASTIC, stochastic. You're gonna star it. Select. And here it is at the bottom. Now, if you've never put the stochastic on before, it's not going to look like this. It's gonna look different. So what you wanna do, you wanna go over to the stochastic all the way here, and you're going to go to the gearbox, the settings, input style visibility. You're gonna, for inputs, you have length, smoothing. You want to make sure you have it at 14, 3, and 3. I'll give you a second to take a picture or write it down, whatever you need to do, right? 14, 3, 3. Whatever it says, you're gonna change it to that. And then you're going to go to style, and you want K to be yellow. You want D to be red. I don't know if these were different. I really can't remember, but you're seeing it, right? Make sure it's like that. And I think background is on. I take the background off, right? So then once you have it like this, you go to defaults and you want to save it as your default. And then you hit OK. And with that, every time you say you remove it, and you have it in your favorites now, you select it, it's going to automatically look like this. If you don't save it as default, every time you pull it up, you're going to have to go change the settings to 14.3.3 and go through all of that. So if you want to avoid having to go through all of that, you just save it as your default, right? And I have the yellow and the red to correspond with the yellow and the red in the EMAs up here, right? And I'm not going to really go into a DeLorean training right now, but just know that with AGB, you want the yellow and red lines to mirror the yellow and red lines up top, right? But stochastic, it's really a powerful thing. I can go more in depth with that next week. All right. But yeah, that's going to be it. Does anybody have any questions?
I do.
Go ahead.
I'm going to send you a photo from my trading this week. I took a picture of my trading view. This was the first week that I tried doing chart markups on my own in a long time since I started learning DeLorean, and that's pretty much my strategy of choice. At one point, I think it was Wednesday, it could have been Thursday, I think it was Wednesday though, that I didn't see any DeLorean setups. I just decided, let me go on and go to my notes and try the chart markups. So I'm sending this, and I don't know if you're able to share it on your screen, but I have a question about something that I did. My trading was successful, but I just don't know if what I did is something that I should have actually done. I'm gonna send it to your Twitter because I know that's how things kind of get to you easier for me. And I'm not able to share a picture in your chat, but anyway, so I marked up my charts, and I think that it was for GBP CAD. I didn't take the bigger picture because my question is about what I was seeing in the stochastic. And ignore the DeLorean EMAs. I just always keep those on. I'd already done my chart markup, so I had the entry numbers that I was waiting on. And what I noticed was that 06, I'll give it a range of 060 to 065 was a major level of support in a few different time frames when I was marking my chart. And so what I saw was that, okay, I got my 061 entry. I took my trade and I cleared it. And then it kept bouncing back down there. When I'm trading DeLorean, I don't like to really deal around the overbought and oversold lines, but it kept coming there and just bouncing off of it. And I ended up taking 3 trades when it kept bouncing down there, and it would go back up. Was that something that was risky that you probably would have cautioned against, clear once and get out? Or I don't know if I was lucky or if that was something that you would not recommend.
So was it a day level or an?
It was a day level. It was a 45-minute.
If it's a day level, that's kind of safe.
Okay, it was a day level, and it also happened to be a 45, and I know you don't do 30-minute, but I did 30 minutes, and it was also a level there. And so I just felt really safe with it. But I don't know if I should have taken it so many times.
Well, I wouldn't necessarily take something coming back to the same area too many times on a lower time frame, but if it
Mhm.
came there in the day
Okay.
and you're looking at the chart and you saw that it was
Mhm.
coming there, and if the history says that it really wasn't going below that,
Mhm.
then why not? You know what I'm saying?
Okay. Okay.
Yeah. But
Thank you.
yeah. So this really, I couldn't really.
Yeah, I'll take a bigger picture, but I was like, yeah, after I did it, I felt great because I cleared, but I'm like, I don't know, this is the strategy that I'm not so comfortable with. So I'll have questions, I'm sure.
Yeah. Like I said, the day level is like super, but it doesn't typically come there. Once we're in the trade, it's doing it.
Yeah.
It's not coming back here.
Hmm.
So if it does, like yay, that's how I
Yeah.
feel.
It
Yeah.
went up to the resistance level once, but it kept coming down to the support level.
But then if you notice, look at this, look at all that wick. So
Mm-hmm.
then, it's like
Mm-hmm.
everything, nothing ever works 100% of the
Oh
time.
yeah, for sure.
Yeah,
For sure.
have a question. Oh, good question. Nisi says that was a good question. Yes. All right. So yeah, any other questions? Because it's 7:25. I know I normally end at 7, but I thought that I just wanted to break this trading view down for people. Oh, and there's another thing I could add. Um, when you're doing your lines, if you don't want to keep coming and getting it and put in here and getting it and put in here, another thing that you can do, you can hit this pencil with the lock. Once you do that, and you select your thing, put a line, you can put a line. You don't have to keep going back to get the lines. Just little things to
That's good to know.
yeah. So and then when you click again, it's off. Yeah. So yes, that's gonna be it for Saucy Saturday. Okay, perfect.
One more question for the record.
Okay.
You mark up the 15-minute, 30-minute, hour, and day.
15. I don't do 30 minutes.
Yeah, okay, I'm sorry, that's me. I'm still.
Okay, and with that, thank you for that. Just made me remember, um, the person that I learned to trade from. I mean, I've learned from various educators different things, but what really made everything gel for me is Ken Vrimo, the Nigerian educator. Um, I highly recommend him to anybody who is looking for a suggestion. If you don't know where to turn, where do I start? Well, number one, you start by watching the videos in the academy. You do that, but then when you're ready to go live and watch videos, he's somebody that I recommend. He breaks things down in a very simple way. All right. But with that, that's another saucy Saturday in the books. Thank you guys. Let's stop recording. All right.